Guys, quick question. What would you rather have? These pieces of paper, cash, a gold bar, or one Bitcoin? Tick tock, tick tock, tick tock. Time is over, guys. What would it be? Gold? No! It's cash. It's always cash. You know why? Because it has pictures of dead dudes on it. And who doesn't like pictures of old dead dudes? I do. Hi guys, hello once again to the Be Vibe podcast. My name is Bernie, and as you already know, we are talking everything about how to escape the ordinary. As I promised before, today it's a very interesting topic. It is about money. So you know what money is? This is money. Pieces of paper. So it's funny, guys, don't you think that we were not taught what money is, how it came into existence, why does it exist, what's the history of money, who makes these pieces of paper and why? Do we print this money? When do we print this money and what's the effect of this? What does gold have to do with all of this? So it's very funny for me to realize that basically I use money all the time, as probably you are also. So you're using and I'm using money every day and all the time. But the truth is that we don't basically understand it. Some people do, but there is nothing systematically that is teaching us, okay, this is money, this is how it's produced, this is what you do with the money, and so on and so forth. So I didn't know basically that this money, these pieces of paper, is nothing more than an IOU. So it's a debt. It's a paper. Practically, it's garbage. It's the most stupidest thing to do is to collect these pieces of paper. Why? And we shall see why is that. So also we'll talk about what are the currencies, what is this fiat money, and do you know that most of this fiat money have already collapsed in the so when you're going in the past there are a lot of currencies and fiat currencies that have gone broke. So did you know what is inflation, what is recession, what is stagflation, and so on? As I was telling you before, I started to do some kind of training, workout, and then I was running one day and I was listening to some kind of podcast, and I have stumbled on some people that were talking about money. So how this money, basically this money, is worthless, is diminishing in its value every day. And the rich people, they do not preserve or collect and stack up these pieces of paper. What do? They take these pieces of paper while they're still having some kind of value and they invest it in some kind of assets, materialistic assets that preserve value, or even better, they increase in value, they produce something, they produce additional income, they make some kind of additional income, passive income streams, and so on. Therefore, I deliberately started to listening about different people and what they have to say about money, specifically rich people. Why? Because obviously the rich people, I believe they know something a little bit more about how to use this in everyday life. So what I have learned is that this is a tool. It's a debt and you shouldn't keep this. Of course, I have listened to all the popular guys like Grant Cardone, Jasper Singh, Robert Kiyosaki and so on. And then someone will say now, okay, but those people are overrated, they are so full of shit, you shouldn't listen to them. Okay, as I already said before, I listen to everyone, but I question everything. And if you came across with the people that have a lot of money, they are very successful in their businesses, why shouldn't you at least listen to what they have to say? So my two advices for you, when you will have that kind of amount of money that those people have, then I maybe will start listening also to you. Obviously, if 10 people that are way richer than me have similar opinions about this money or something related to money, maybe there is something there that I should pay attention. So, as I already said, I listen to everyone, I listen to everything, but also I have my own brain, I evaluate everything, I question everything, and at the end, I make my own decisions and my own conclusions. It doesn't mean that all of the guys that I have been listening to, like Robert, that they are 100% correct, that everything they say is written in gold, and I will immediately jump on that and do what they say. Just, just for you to know. Obviously, I started investigating a little bit more about what this is, what's the history of this, what's fiat currency, what is inflation, why crypto exists, how it is connected to this gold, and so on. And then, obviously, I started to become very angry with myself because how come I don't understand the thing that I use the most every day? So I have been taught some trigonometry, some physics, chemistry, but something that I use on everyday basis, I know so little about that. And it would help me and make my life a hell lot easier and help me to escape this, as I said, the matrix and so on, if I knew something a little bit more about this. As I said, when we are talking about investing, if you invest into something that you don't understand, basically you're gambling. The same thing goes for money. If you don't understand it, if you're using it like this, like just going to the store and give it to anyone and buy some shit, then you're also gambling with that money. You're not putting it to work and you're not using it as a tool. Then that's why I have decided to learn a little bit more about this money, and we will start with the history. So buckle up. Let's dive into this weird, wild, and wallet emptying history of money. And guys, if you want to learn more about such similar things about money investing, general investing, how to make your budgeting finances, and so on, how to learn some additional things, then down in the description you have my personal link to the Game Changer community that you can use in order to find different kinds of online material and to be, let's say, on top of your game and to finally gather the knowledge that you need to escape the ordinary and to escape the matrix. So let's go down this road. History of money. So obviously this money didn't exist for millions of years. It came into existence at some point at time. And picture it this, it's 10,000 BC and you're a Neolithic caveman. And you have, I don't know, 50 pounds of yams and you need a spear or you need some kind of clothes or something like that. And what do? Basically, you are trying to find one specific person that wants what you have and that can give you what you want. And can you imagine what the struggle was? Because the first struggle is to find that specific guy that has the specific thing that you need. Let's say pants or spear or bunny fur or something like that, and you have yams. What if the guy that makes a spear and that you have found at last after 20 days of searching, you have found this guy, and he says that he's more of a carrot guy. He doesn't eat yams, he doesn't need your yams. So basically, you don't have any kind of value to give to him, but you want some value, you want something from him. And that's where this problem occurs. So we need something that we can interchange on this market. So as I said before, market is supply and demand. On this market, you have to have some kind of means of transaction, some kind of, I don't know, thing that once you give it to another people, to another person, that person will give you something in return that you need. And then what happened in this during the history, humans discovered some shells, cowrie shells. Yes, you heard me good. They were seashells. So suddenly people were like, why to carry these heavy yams or I don't know, carrots or I don't know what, if I can just make a nice necklace of these seashells that are very popular, everyone wants to have this necklace, everyone wants to have these seashells, and everyone recognizes these seashells as something valuable. So those shells, seashells, they become so popular over the years. They were used everywhere from Africa to Asia and so on. They were basically like Gucci belt of the ancient world. So they were used both as a currency, those seashells, and as flags, just to show around. And then probably someone down the line got sick of these seashells and said, okay, let's use metal. It's shiny, it's durable, it's great to be thrown at people. So around 600 BC, the first coins appeared and popped up somewhere around Turkey. And what happened, the kings of those time, they loved to stamp their head on top of these coins, making these coins basically the first equivalent of today's selfies. In ancient Egypt and in Mesopotamia, I believe that you know where I'm going. There is a specific medal that was very, very popular and very, very, how do you say, everyone wanted this medal. It was in high value. And basically, what is it? It's gold. Why? Gold is durable, it's rare, and it's something that has this kind of intrinsic value that it can be exchanged between humans, that you can give this to someone else and that someone will give you some kind of goods in return that you need. Basically, the value of this gold, it was measured in its weight. So they weighed this gold and it was, I don't know, 10 grams, 100 grams. And basically using this weight, they have found out how much this is worth and they calculated how much of yams, carrots, bunny furs or slippers, I don't know, you can get for this kind of gold. And basically it was a milestone in our history when we decided, okay, like seashells, we will not trade yams and carrots for spears because it's very hard in this market to connect these two people. You can die before you run onto some specific guy that makes spears and he wants yams. One in a million. That's why we have agreed there is something that we all want, and then we can exchange this for some goods and for some kind of services. So gold is very good, it's durable, it's divisible, so it can be cut in half, in thirds, etc. It's portable to some degree. If you have a ton of or 2 tons of gold, then it's not portable as much. It's recognizable, so everyone understands what's gold, regardless where are you on earth. And it's rare. As I was saying before, everything that is rare, so it's scarce, and everyone wants it, the value tends to go up. So it's a good place to store the value because it's rare, it's scarce, and there is a demand for it. Okay, after that, somewhere 800 AD in today's China, there was some bold innovation. We invented paper money. So it was like, oh, trust us, this is worth something. Imagine that someone comes today and take a post-it note and then says to you, oh, this is totally worth $100. So basically the concept worked, though, and soon everyone was printing bills. So you had a very big forgery because everyone was making this paper money at home, some better than others, obviously. Then you have something that's called hyperinflation. There is a lot of paper, a lot of bills that is issued and circulating in the system, and then you have hyperinflation. Basically, you need a lot of these papers to buy a loaf of bread or something similar. Then what happened? We invented as humans something called banks. What happened? It was very, very, I would say, inconvenient to move large amounts of these gold coins, bars from one place to another. Imagine that you have 100 kilos or a ton of gold and you want to move that gold from San Francisco to New York. Do you know what the struggle is? You have to go over the rivers, the gold chests, they can fall off, you can lose your gold, you can be, attacked by robbers, by thieves, and so on. So it's very risky business and obviously it's very heavy. So you need horses, carriage, and something like that to move all of those gold bars from one place to another. And then the bank said, people that invented banks said, okay, let's put that gold here in our safe in San Francisco, and I will give you a piece of paper that's basically an IOU saying this bank, this institution owes you, 10 kilos or 10 pounds of gold for this piece of paper. Then you take this piece of paper, put it in your pocket, and obviously it's very convenient, and it's much more convenient to travel from San Francisco, from Los Angeles to New York with only this piece of paper in your pocket, as opposed to bringing tons and tons of gold. And once you have reached your destination, let's say New York, you come into the bank once more, into the same institution over there, and then you swap. Then you say, okay, guys, I have this. Please give me back my 10 kilos or 10 pounds of gold. We have a lot of problem with banks because it is okay if it's like this. You have, let's say, a piece of paper that's pegged to the gold, so how much gold there is, you have the same amount of paper circulating in the system. But the bankers and the guys who were running the banks, they decided to be a little bit naughty, let's say, and they started to lend this gold out to other people for some kind of fee. Why not? Why to store all of these tons and tons of gold bars in our safe when we can lend it out and then we can get a return on them from other people, so we can do some kind of business with this. And it's all okay until you come to the bank and say, okay, I want my gold back, and the bank said, oh, but I don't have your gold right now. Please come in 5 days. I believe that Peter will return the debt by then that I have lent him this gold. So if we are moving fast forward to the 20th century, what we have today, we have something that's called fiat money. And this money is not, so this money today, if you do not know, it's not pegged, it's not connected or related in any way to gold, silver, or even a good YouTube review that you will put on my podcast. The only reason why this paper is worth, let's say this is $2, it's worth $2 because someone said so. And who is that? That's the government.
No, God! No, God, please, no! No! No!
So this trust me, bro, it became a foundation of our current global economy. And I believe that you know that there is a little spoiler alert. This doesn't always go well. There are a lot of currencies like Zimbabwe dollars or Venezuelan bolivars or something like that, which now are nothing but as souvenirs because they are worthless. There are so many of those bills circulating in the system. It's millions, trillions, that basically they are each one, so this one Venezuelan bolivar or one Zimbabwe dollar doesn't give you the possibility to buy anything. It's worthless. And today, so current year, 2025, we have gone so cyberpunk, so we have credit cards, we have cryptos, NFTs, different things. The money isn't real anymore, it's digital, it's cryptographic, it's this or that, it's just numbers on the screen. Some people say Bitcoin, they swear it's the future of the money, and so on. Whatever's next, one thing is for sure. Humanity, this weird obsession with shiny thing, isn't going anywhere. So we'll always have some shiny thing that we will say as humans, oh, it's worth something to us globally on a global scale, and we will use this as a mean of exchange and trading and transaction between different people. Okay, so let's talk a little bit about this gold and what's a gold standard. I believe that you have heard something about the gold standard, and it was introduced in stages, evolving over centuries and societies, and they sought a stable system to back their currencies. So in ancient times, long time ago, this gold was been valued as money, and it was valued for money for thousands of years. These ancient civilizations like Egyptians, Greeks, Romans, they used gold as currency, but it wasn't formalized then like a gold standard, but basically it was a gold standard. So everything that is rare and everyone wants, it's a good store of value and it can be used for people to interchange. Then somewhere in the 18th, 19th century, after the Napoleonic Wars, Britons, they wanted a stable and trustworthy currency, so they tied the value of the pound sterling, so their currency, to a specific weight of gold. So it was always backed with gold. So you know at any point of time, how much gold can you buy, can you get for a certain amount of pound sterling. And this system then spread around the world to other countries. They adopt this, and including Germany and including the United States. And by the late 19th century, the gold standard basically became the dominant global monetary system. So under this system, currencies, they were pegged to gold at a fixed rate, and countries maintained gold reserves to back their money supply. Then, as we all know, the World War I happened and World War II happened, and basically during those war years, there is some, let's say, interesting thing going on, because they decided to depeg the money, the currency, from the gold, because they need to print more money to finance the war. So many of the countries abandoned their gold pegs, at least temporarily. That led to inflation. That's why you had, during the world wars, you had so much inflation. And after the war, after the Second World War, the gold standard was revived, and it was pegged with the US dollar. So this dollar was pegged to gold, and other currencies from other countries, they were pegged to the dollar. This is known as gold exchange standard, and that's why you have a US dollar that became the global reserve currency, because other currencies, they have related their own rate of their currencies to the dollar, and the dollar was pegged, was connected to the gold. Of course, because after the First World War, the US had the largest gold reserves. Nearly, I believe it was around 75% of all the gold in the world was in the US. So to create this stability, this dollar was pegged to these gold bars and to this 75% of gold reserves. And at a fixed rate, it was around $35 per ounce. And then other currencies were pegged, as I said, to $2. It was, this currency was so good because it was good as gold. You can always swap and you can always convert this piece of paper into gold. So the dollar became so trusted, like an anchor in this global trade, finances, and so on. And then, somewhere in 1971, I believe it's 1971, President Nixon, he decided to depeg, to remove the relation between this and this, so between the dollar and the gold, and says, okay, the dollar is not pegged to the gold, so I cannot swap this paper to a certain amount of gold anymore. We are removing the gold, and then this paper has a value only because the government says that it has value. And then all the money printing also started, and so on. But the money printing started even before, and that's why it was a very big pressure to maintain this relation with the paper, this paper and the gold. And they say we cannot do it anymore. They depegged the paper from the gold and say, okay, this paper is now worth because we say so. And once more, guys, don't think that today's money is related to something. It's related to nothing. And this basically gives the opportunity for the governments to print the shit out of this, to print as much as you want. And as anything else in the world, if there is an abundance of something in the world, the value of that tends to go down. The same thing is with this paper money, the fiat money. If you print it, you put a lot of it, so there is a lot of supply in the system, there is a lot of papers in the system, and then if you dilute it over the assets that you have, what happens? You basically put a lot of papers, much more than before, a lot of these papers on some kind of assets, and what it happens? The assets price, they go up. That's inflation. That's basically inflation. Because the supply is so high of this paper that this paper becomes more and more worthless. So it's less worth, if you understand what I mean. And because of that, you need more of it to buy the same shit that you have been buying it, I don't know, yesterday or the day before. This gold-backed money was not practical for growing economies and for global trade, because if you have a peg between the paper and the money, and the paper money and the gold, if you have an economy that's moving and growing, let's say, faster than you can mine this gold and so on, then you need more and more money to stimulate and to be in line to be able to transact in such growing economy. And if you don't have more of these papers, these money papers, then you are, let's say, pulling this economy growth back. So you're not giving a space to flourish, to grow. And that's why you need a certain amount, let's say 2-3% of inflation. So you print the money to be able to stimulate the growth of your economy. Okay, so what's the biggest problem of this fiat currency? As I said before, it has only value because government says it does. It has this problem with inflation and hyperinflation because, let's say after the Second World War, Germany was so in debt as a loser side during the war. They had to pay, I don't know how many millions and millions of dollars or marks, it doesn't matter. And they didn't have that kind of money. So what do you do if you don't have that kind of money? You go to the printer machine and you print the money. And basically the paper becomes worthless. Then what's the problem of this? You have a centralized control. So someone is in control of this. You have a central control that monitors the printing, the issuing, the returning, the this or that, the supply of this paper, let's say dollars. Then this is prone to misuse by governments, by the institution. It depends only on fate. It encourages governments to go into excessive debt. Why not? Because you can always print more. Why don't go into debt? If I don't have money, I'll just print it. Imagine, guys, that you have some kind of a loan and you don't have an ability to return this loan. You don't have the money to return it, to pay it back. And then you simply go into your room, press print, you print this out and you return. And that's that. So it's not okay if you do it, but if government does it, then it's okay. So you understand what's the problem of this fiat currency. And good part of these issues were resolved with cryptocurrencies. So that's why I'm a huge advocate of bitcoins, of cryptocurrencies, so on, because you don't have this centralized control. There is no problem with inflation with crypto. You don't need to believe in it because the belief and the faith in crypto is distributed all around the world on thousands and thousands of computers and so on. So you don't have to have the faith because it's a computer code, it's an algorithm. So you have faith intrinsically built in the technology itself. That's why I'm so let's say, into this crypto and cryptocurrencies. Now, you know, guys, why I said invest into assets. So like businesses, crypto, real estate, gold, commodities, because they are not worth only because some government say they are worth something. They are worth because people need that stuff. People need place to live, people need something to eat, and so on. That's why those commodities and those things will always have value. And you will be always able to swap and to change, I don't know, an apple with a spear if you came across a guy that makes spear. You need a spear and he needs your apple. Because people do not need this. You don't, what can you do with this? You can maybe, I don't know, make a fire and then it will be nice and cozy for a while, but that's it. Doesn't mean anything unless you transact. So as I said, there is a 2-3% of good, let's say good, inflation to stimulate the growth of and to keep up with the growth of the economy. And this is a tool, and you have to use it to swap with some other people to get some kind of different things. Or in my case, I want to swap this for assets that will go up in value, that will bring me some additional money, and so on. That I will preserve this, because if you just put it in a sock, let's say in the best case scenario, you will lose 2-3% of the value of this every year. So why to do that? It doesn't make any sense. You get this, you put it to work, you get different kinds of assets, and then you preserve your value. Okay, guys, I believe that I have told you more or less about the money. This is it for now. Next time we're going to talk a little bit more about banks. What are banks? What is fractional reserve banking? What is loans? What are the service of the banks? And so on. What are the problems if you are using the banks, and so on? And how do banks, make their money, make their living? So it's also one of the topics that you need, because you use banks every day. You use it for your paychecks, you use for your loans, you use it, I don't know, for something, for your savings accounts. So you're using the services of the bank every day, but you maybe don't realize, or you don't even know, what are banks, what do they do for a living, and why sometimes you have an interest on the savings, sometimes you don't have interest on savings, sometimes the banks are stimulating you to put money into banks, sometimes the banks are not willing to take your money, so they are pushing you away if you come with a lot of money. I already said today, it's very important for the banks that they know when you will come to get and collect your money. So we will learn why it's not possible. Even though you have on your bank account $1 million, you cannot come immediately this instance to the bank and say, okay, give me my $1 million. It doesn't work like that, because they don't have your money, you don't own your money, and so on and so forth. There is a lot of complications here, but we'll try to tackle them down the road. Guys, if you have learned something new today, share this episode with your friends, with your relatives, and let's get people thinking about how their money works. And also send me your questions about money, fiat, crypto, or anything else, and put it down below in the comments or on Instagram, on TikTok, and let's have the conversation about money together. So guys, stay smart, stay rich, escape the ordinary, learn. We have to learn together, and we have to learn every day. Bye bye, guys. See you soon. Picture this struggle, guys. The year is 10,000 BC. You are a caveman and you need a new spear. What would you do? Obviously, you're finding a guy who's making spears. And you're searching and searching for the guy, and finally, at the end, you find that guy who makes the spears. And the only thing that you have to trade with is a bunch of yams that you have. And the guy, he says to you, "Oh, but I'm more of a carrot guy. I don't need your yams." Tough.